Chapter 2, Navy Management of Petroleum Reserve Land, making of the Petroleum Reserve the number 1 and number 2 with the not with completely government owned with the Navy to approve with the managing reserve, recognizing the success of the Petroleum Reserve the number 2 with the Navy, the contract with the concern with the maintain with the project with the Petroleum Reserve the type of the contracts award provide with the reimbursing the operator for the costs incurred with the operator's fee with the Navy also enter into the contracts the other supply services for disposing of the petroleum product produced the result of developing and maintaining the reserve, contracting for supplies and service the Navy the awards cost of the reimbursement type of the contracts operation maintenance of the petroleum reserve having little financial interest in the amount of the costs incurred contractors lack incentive to operate efficiently with the economically effective the operation under such contracts require close administration by the Navy. The procedure followed by the Navy, however, does not ensure that the contractor activities effectively controlled. And committing with the system of the Navy denoted with the major of the procurement of the contract with the Office of the Navy Petroleum Oil Shale Reserve with the review with the Judge Advocate General of the Navy and the President. In addition, undergoing review by the House and Senate Committee for the Armed Services review with the major contract level that may be required. But in my opinion, in our opinion, we have little effect on how the contractors operate after the contracts are awarded. Indeed, it appears that some of the reviews have not effectively controlled the operation Navy the Petroleum Reserve. Operations of the Navy Petroleum Reserve circumstantive control of the contract controls by the issuing work orders under the existing contracts for the outside of the scope of these contracts. Operating agreements for years prior that firms have operated with the Petroleum Reserve number 1 and number 3 with the Navy recently selected a private firm to operate with the Petroleum Reserve number 4. Petroleum Reserve number 1 Elk Hills, Sierra Oil, California operated with the reserve for the Navy since the inception of the unit plan contract in 1944. In February 1975, saying with the Navy of its intention to terminate the operating agreement of the 19th November 1975. However, the planner of the Navy and Stanford agreed to operate with the reserve of the unit and continue to effect with the Navy solicited proposals from the other firms to replace Stanford as the operator. From 5 proposals received, the Navy selected the reserve of the signs of the corporation to be operator. Contract was subject to the approval by the President after the Navy. The cancellation of the House and Senate Committee for the Armed Services. The contract was approved November 1st, 1975. Navy proposed the operating agreement did not contain some of the provisions recognized by the Armed Services procurement regulations as necessary to protect the government interests of the contracting from the goods and the services. The proposed contract with the new operator provided the contractor reimbursed for the allowed costs for the pursuant of the Armed Services procurement regulations. In addition, fixed monthly fee, however, they did not sufficiently provide access to the contract records for determining the reasonableness of the cost to be reimbursed. Proposed contract did not contain the provision for the contract records would be available for the inspection examination by the designated representatives for the Navy and Standard. It did not provide the access of the representative to the Comptroller General. After the question of this, the Navy noted that the Comptroller General would appropriately be the designated representative of the Navy. But to clarify the original intent of the Navy, the expanded of the word of the formal contract to provide the access of the contractor's record by representative of the Defense of the Contracting Audit Agency and the Comptroller General. Contract provided for the Navy to make the provisional payment over the end of each month of the estimated reimbursement call for that month. Previous provisional payments are adjusted with the actual reimbursement costs, including overhead regarding negotiated final overhead rates for the reimbursing the actual overhead call for the monthly base for the in accordance with the Armed Services procurement regulation, which provides for the overhead with the reimbursement of the tentative billing rate with the pending negotiation of the final overhead rate at the end of the regular stated period, preferably as the contract official year end, as such will allow the accumulate costs for all concerns and ensure the priority of the cost allocations. Navy has concluded you for the provisional of the overhead with the readjust the annual basis if not necessary with the Navy to know of the procedures to make the provisional monthly payments, which are adjusted the following month in accordance with the actual reimbursement costs included. Overhead actual reimbursement costs intended to reflect actual audit of the costs of the records are subject to the continual audit both of the Navy and the Defense Contract Audit Agency. Based on the discussion of the Defense Contracting Audit Agency with the question of the Navy, the position time of the provisional monthly payment is made. Actual costs for the previous month will not have been accumulated, but cannot be auditable, and sometimes later with the Navy to receive the provide monthly audits for the actual costs. Defense Contracting Audit Agency plans only to make the larger monthly tests and to make the annual audits overhead charge of the Defensive Contracting Audit Agency noted that as of January 1976, the operator did not yet install the acceptable accounting system. Petroleum Reserve number 3, the Teapot Dome. The agreement to operate with the reserve that entered into the Intex Oil Company in August 1958 with the identified with the period for an indefinite period with the Intex merged with 2 other companies in 1967 and formed the Tesoro Petroleum Corporation. Operating agreement to continue with the Tesoro that has operated reserve since that time. The agreement is inconsistent with the Navy's objective of conserving oil for the use of the event with emergency, also with the adequacy of the agreement to compensate for the operative for the questionable within the operative for the computed fee for the fluctuates for the price of the crude oil. Or the agreement provided with the computation operator's monthly fee with 6% of the net profit determined monthly with the deducting operation cost of the portion of the development cost of the sale of the receipt with the Navy that receives. Does the operator receive the portion of the revenues of all of the oil the Navy sell, therefore has the incentive of producing as much as possible. In commenting on this, the Navy stated that it did not agree with the more than oil necessary that was produced to enhance the operator's profit. The Navy stated that it controlled the amount of the production of the operative noted that the average daily production for the reserve has steadily declined. However, the Navy Petroleum Reserve Production Act of 1976 provided the increased production from the reserve. The Navy did agree, however, that the operator's fee could fluctuate significantly because of either of the price of the oil cost to operate with the Navy. They recognized that the contract no longer provided a fair with the equitable rate agreement with it has requested the proposal of the new operative contract for this reserve. They needed a different method of arriving at the reasonable fee of the arrangement with the emphasize with the recent legislation required with the increased production. Production was limited with the amount necessary for the protect the maintaining the reserve of the quality oil available to sale with the Navy. They should have then quantity produced because of the testing of the reserve of the protecting it against drainage from the production of adjacent lands. The operating plan provided with the officer in charge of the reserve indicated the Navy filed with the mirror image operating objective to protect against the drainage under the mirror image concept. The offset of the production for each well the neighboring the property there should be within the well within the reserve producing at the same rate at the neighboring well. Production date for the period of 1970 to 1974 showed in each year the operator would produce the more oil with the reserve that was produced the adjacent profit. The commenting on this, the Navy noted that it does not follow the mirror image operating objective stated that there was a valid engineering reason for the production more oil with adjacent products used over the Navy stated that in producing oil with the prevented damage by gravity off of the reserve that it is not with the feasible to shut down the Navy wells merely because an offset well is shut in for 30 days or so. The officer in charge of the reserve acknowledged for the oil production for the reserve exceeded that of the adjacent property for the stated that and sometimes may be necessary to produce more oil than an adjacent property. However, he was unable to provide specific data outlining the reason for the justification of the quantity of the offset production of the petroleum reserve number 3. Concerning the operator's fee of the recent increase of the oil price for the provided for the added sign for the produced oil reserve of the during fiscal year of the 1974 price for the crude oil from the reserve increased about $3.50 to $10 a barrel to December 31st, 1974, but the prices increased almost to $12 a barrel. The following table shows how the increased prices affected revenue of the contractor fee during the calendar year 1974. And then shows the chart. The oil shale sold in 1974, 124 and 124,483 barrels. Gross fees less deductible net proceeds. Contractor fees fixed percent. Monthly fee and the 6% computed net profit to add the minimum of $500 a month with the $3.50 price for the minimum fee would have been required for the 3 months of the year. But the Navy did not disagree with the operator's fee, but the increase for the noted that in 1974 only twice as large of the year before that. The Navy noted with the contractor's average fee over the past 17 years have been 9% of the expense of the date. The expense of the fee for the period showed for the average computed fee to have been about 9%, but it's also showed that for the last 2 years of that period, official years of the 1974 and 1975 of the period increased oil prices, the operator's fee was 25% a year. Petroleum Reserve number 4, but the Navy did approach operating with the reserve that differed from those of the other reserve, although the officer in charge has the assignment of the reserve for the most part, with the day-to-day activities conducted for the operation. The Navy, the Petroleum Reserve headquarters received the expected the change of the Navy to finance for the contract within the operator, but the Navy solicited proposal of the operator September 1974. Proposed contract was subject to the approval of the President of the Navy, the Constellation House, the Senate, with the committees for the Armed Services. The new 9 proposals received the Navy selected the Husky Oil Company to be for the operative of the June 1975 of the Navy awarded the Husky $400,000 letter contract to have the necessary facilities available for operation. When the proposed contract was approved, the President approved of the contract with November 1775 to be effective December 1st, 1975. The contract provided the operator would be reimbursed all eligible costs, monthly performance fees, and the fixed amount of the compensation overhead expenses. This method, providing the overhead costs, is not in accordance with the method suggested with the Army Service Procurement regulations. The Navy Petroleum Reserve of the Production Act of 1976, and the transfer of the responsibility from the Reserve to the Department of the Interior effective June 1st, 1977. Transfer was also included responsibility for any of the contracts in effect with respect to the Reserve activities. Contracts for other services and supplies operating with the Petroleum Reserve in Alaska, Navy the personnel have not filed with sound contracting procedure. They have purchased supply services without assurance if the government's best interests are being served. The Secretary of the Navy, the contracting authority activities concerned with the Petroleum Reserve, the acting for the Secretary, Assistant Secretary of the Navy that approves, signs all contractors have the operating Navy petroleum regulations, can circumvent the procedure, the issue of the job order, existing contracts for the work outside of the scope of the contract. For example, the Navy contracted the advisor engineering service to the individual because of the knowledge of Arctic operation and familiar with the operation of the Petroleum Reserve. The number 4 for the instruction of the operation of the Navy, the Petroleum Reserve. However, the has acted the Navy, the purchasing agent during the fiscal year of the 1975 materials equipment purchase under the contract for advisory service amounted to over $490,000. For the Constellation was instructed to direct the cleanup program with authorized to employ the staff, of the cost of which during the fiscal year of 1975 amounted to $167,000. Navy officials told us shortly after the current Operation Navy Petroleum Regulations Director was assigned with the discovery of the procurement activities under the contract with the Navy, noted that it had restored the extraordinary procurement methods because of the needed suddenly employment of the exploration program of the Petroleum Reserve number 4, and that these unusual methods were taken during the transition period. While recognizing the contracting procedures were out of the ordinary of the Navy to disagree with the best interest for the government were not being served with the inclusion of the Navy procedures not adequately protect with the government interest and subsequently support with the Navy the audit service of which of the examining with the contract agreements with the Constellation were concluded the contracts were extremely weak, and that the report was also discussed on page 13, recommendation termination of the contract. In another instance of the circumventing with the contract with the Navy, the entry within the contract by the independent petroleum account of the contractor was provided. In service with the organization of the engineering, geophysical constellation advisor and or representative with respect with the Navy, the operation responsible for the Navy, the petroleum oil shale with the reserve ran the technical of the subject of petroleum engineering geology as required. In summer 1974, a job order was issued with the contract with the provide with the developing information following retrieval system and the estimated cost over the $206,000. The work does not appear with the related with the technical advice with the periodic petroleum engineer with the geology with the current operation Navy, the petroleum regulations director agreed, stated that this work could be performed by any firm within Washington, D.C. area that he can cancel for the job order January, February 7, 1975. The Army Service Procurement Regulations provide that all procurements should be made on the competitive base for the maximum extent possible, with the contract private needs to be higher with the bids proposal not genuinely competitive in our opinion. In the Navy, the procedure of obtaining additional service throughout the use of the existing Constellation contracts that ensure full and free competition. Controlling contractor activity tight controls are needed to ensure efficiency for the economic operation over the cost of the reimbursement contracts used by the Operation Navy, the Petroleum Reserve. At one point, measure for the control of the contracting document provisions included therein, and other measure for the direction provided with the contract for the day-to-day operation. The Operation Navy, the Petroleum Reserve has not taken full advantage of the service of these measures. Contract provisions. Army Service Procurement Regulations implemented the Army Service Procurement Act of 1947 that sets forth the uniform contract policy. The procedure applies to all purchases of the property, except lands for which where the payment is made for the appropriated fund. The procedure for the applicable for the Department of the Navy personnel will leave, however, the Army Service Procurement Regulations does not apply for the contracting for supplies and service of the Petroleum Reserve. In September 1969, memorandum of the Director of the Office of the Navy, the Petroleum Reserve, the Judge Advocate General of the Navy stated the authority to perceive the administrative of the Navy of the Petroleum oil shale with the reserve that included the contract stems for the Act for the contracts codified with the 10 United States Code Section 7421 through 7438. Exclusion acts the regulation generally applicable for the military procurement. The conclusion apparently was based on the earlier Navy memorandum entitled Memorandum of Law of the Contracting Authority of the Secretary of the Navy Petroleum Reserve and applicable for the Army Service Procurement Regulation. Memorandum contained with a broad conclusion that the Army Service Procurement Regulations does not apply for the contracts relating to the Navy Petroleum Reserve. That should be noted that have the situation which the memorandum dealt with involved on its only sale of crude oil with the Petroleum Reserve, with the not procurement of the property services for the Petroleum Reserve. There's little doubt that the law will arrive at the special procedure of the shale of the petroleum for the Naval Petroleum Oil Shale Reserve that governs the exclusive as the Army for the Petroleum Reserve. Such shales does not seem to be within the category of the government purchase of the contract to purchase with the Army for the procurement regulations expressly expressly apply. We believe that also the Army Civil Procurement Regulation does not apply to contracts entitled into the joint exploration, conservation, development of the land, such as those in the Agreement of Petroleum Reserve of the number 1. Such contracts for use of land and raw minerals therein, rather than purchase of personal property and services. In our opinion, the contract personal for the operating agreement, the various Petroleum Reserve that does not fail with the category of the contracts of the property of the land with the services there for should be governing the Army Civil Procurement Regulation and major consideration statutory construction given an effect of the legislation and litigate intent. Legislation, the legislative history of the Army Civil Procurement Act shows that Congress intended to in comprehensive possibility to apply all procurements of the supplies and services by every branch of the armed forces. In commenting with this Navy state with the view of the findings question of the Army Civil Procurement Regulation applied with the careful review of the Department of Navy and the Navy, the assistance of the Office of Federal Procurement Policy and the Navy to know that the problem would be completely resolved, that it would provide comments for the issue for the later date. As to the date of this report, we have not received the comments. Controlling of the day-to-day operation, reserve has not been operated economically under the Navy. The contract administration, one of the reserves, the oil wells are not well maintained. Inadequate maintenance. Navy to develop the cycle of testing schedule of the well with the pipeline process of the storage facility of the Petroleum Reserve of the number 3 have the operation of the Naval Petroleum Reserve did not have formal program with the systematically test the wells in accordance with the maintenance policy of the officer in charge of the state that he believed needed orally directed for the contract to test with the wells test for the operation with the Naval Petroleum Reserve file with the perceived insurance. The problems were solved with the test at 89 wells regulated with the equipment in 1973 discovered that 18 wells could not be produced because of the mechanical failure of the line leaks or undefined problems. The operator representative told us that the problems had been corrected, but the Navy had no records to support it. The officer in charge said that the wells have been the operator produced to be sure that the problem had been solved, but it was uncertain whether the wells have been produced since the test. The Navy did not have the formal written maintenance plan with an effect with the name number 2 in the time of our review of the Navy stated that the past well with the other equipment that had been tested with the unscheduled abatement of the problem to discover the readily corrected. However, the notice example above the officer in charge could not be sure of the problems have been corrected with the Navy done with the subsequent to our review. The officer in charge began 1. To formally schedule the all test, the record test results problems discovered and with corrective for the actions taken with 3. To develop the formal maintenance and testing program, inadequate control of the expenditures during fiscal year of the 1974-1975 of the Navy, the approval of the payment of the contract of Petroleum Reserve of the number 4 for the current question will expend with the existing interest on the bank loan and accounting for the premiums of the life insurance policies after discovery of the matter of the operation Navy Petroleum Reserve personnel. The detail of the contract with the charge of the life insurance premium is no longer being approved. They also require the Navy the audit service to be in the detail of the analysis of the expenditure of the contract. Its report with the director of the operation Navy the Petroleum Reserve of the Navy audit service is noted that the contract agreements and contract government most of the transaction were extremely weak and did not protect the Navy. The interest of the report contained recommendations for the administration and the procedural improvement of the better protect the interest through the determination of the contract certain costs of the adjustment with the memorandum assistant secretary with the Navy the installation and logistics director of the operation Navy Petroleum Reserve of the noted the contract determined effective November 21st, 1975, the required cost adjustments would be made final settlement. He noted the action had been taken with all recommendations mostly before the receipt of the Navy Audit Services report. A contract with Alaska Reserve was awarded in May 1974 with a value of $385,806. Environmental compliance with the work completed September 30th, 1974. The January 1975 overrun over $140,000 had been experienced and the work was still not completed with the latest modification of the contract dated January 7th, 1975. Increased the total to cost of $526,294. Work was completed only with the 2 of the 3 sites specified with the contract. Much of the overrun with the delays occurred because of the contract for the repair of the modified with equipment which did not meet with the performance specific specification equipment that has been with the purchase of the Navy. The contract purchase the agent cleanup of the work remaining 7 is not expected to be completed until sometime in the fiscal year of the 1977 will be performed another contract. Navy statement at the time of the 2 of the 3 air that had been cleaned up and practical to reach for the 3rd air of the cover of the thawing of that part of the contract work was terminated. According to Navy official for the defense of contracting audited agency, the auditing all of the cost of the cleanup contract with the result will be used and arrive at the fair and reasonable element of the contract. are disposing oil and gas produced for the Navy to produce some of the oil and gas petroleum reserve of the course for the development and maintenance activity. Elk Hills Reserve with additional protection may be necessary to comply with the unit plan agreement under the reserve of the operator. Under the unit plan agreement, the Elk Hill with the team of the oil with the permanent to receive the quantity of the production sufficient to pay with the share with the operating expense plus tax levied again for the company's land and equipment to those taxes levied by local taxing authority have increased from $500,000 in 1969 to $5.5 million in 1975. TAM was allocated to 78% of the oil produced in the calendar 1974, 38% of the 1975 production. Much of the gas produced for the re-injected of the reserve to help with maintaining the pressure and ensure the ultimate recovery of the greater quantity of oil with the remaining production of the gas oil for the either sold for the use of the government agencies. Except for the quantity allocated with the standards as discussed above, the oil and gas produced from petroleum reserve of the number 1 and 3 are sold competitively to the highest bidder. Oil has not yet been produced for the reserve of the Alaska gas produced for the reserve of the either sold with the barrels utility for the resale of the city of the barrel or used in the U.S. agencies. Crude oil sold with the competitive bid sales for the base for the price for the crude oil of the areas plus for the purchaser bid. Sale of the barrels utility incorporated. Late 1940, the Navy began operating with a natural gas field with a near barrel to provide a fuel for the government facility in the air, with including the Navy, the Air Force, and Public Health, served with the Navy, National Weather, served with the National Bureau of the Standards. 1962, local civilian residents received permission from the Congress to purchase the excess gas from the Navy. It raised based on recovery of the cost barrel. Utilities Incorporated was formed and distributed the gas to the village. Navy sold the gas to the barrels and utilities owned for the 5 year of the contract, first year of which began in 1964. The rate during the first 2 year contract with 50 cents per thousand cubic feet. Navy reassessed the rate of the 1974 with the contract notified with the barrel utilities that the rate would be increased to 77% of the 77 cents per thousand cubic feet to cover the allocable costs. Or analysis of the Navy, the cost computation discussed two significant discrepancies for the amortization of the capital items. They were offsetting, however, they had a little effect on the rate of the wood found several minor errors with the total, but it did not significantly affect the final rate with computed rate allowable cost in 76 cents per thousand cubic feet of the Navy, except for the barrels utility has been in the suit with a prevent with the Navy to increase the price. September 1975, the court has not reached the decision of the request until the decision is reached. The rate remains at 50 cents per thousand cubic feet. In 1976, this legislation provided the gas should continue with the provided village of the point barrel with a reasonable equatable rate for the respect with these rate with the House Report number 294-942 with the date of March 23, 1976. Stated the cost provided with the truth and unexpected with the rate authorized with the rate should be at the level to which reasonable from the federal government viewpoint, that it be equitable from the user's viewpoint. Every disposable income of the village residents should be considered in the determination of the equatable rate might be. Conclusion: the Navy to proceed with obtaining service and supply of the contracting operator activities does not adequately protect the government interests. In the dealings concerning the Petroleum Reserve of the Navy, personnel believe that they are not required to follow the provisions of the Armed Services Procurement Regulations. They are awarded by the contractor under the General Contracting Authority, contained in a law which directs the Secretary of the Navy to take possession of the administration of the reserve for the benefit of the United States. We agree with the Armed Services Procurement Regulations does not apply with the contract for the Navy to enter within itself petroleum products produced with the reserve that does not apply with the agreement to jointly explore, develop the reserve such as the unit agreement for the Petroleum Reserve number 1. In our opinion, however, the Army Services Procurement Regulations does apply with the other contracts. We believe the history of the Armed Services Procurement Act implemented by the Army Services Procurement Regulations clearly show that it was the legislative intent that all the purchase supplies and services were to be made under this act. So services and supplies would be, in my opinion, include the services supplied by the firm, but they operate with the reserve of the Navy to purchase supplies and equipment needed to carry out these operations. We also believe in the manner in the operation the Navy's Petroleum Reserve has purchased such services and supplies discussed in this chapter indicates that the needly clearly defined contracting procedures such as those prescribed by the Army Service Procurement Regulations. The operating contract with the Petroleum Reserve, the number 3, with the beginning in effect with the 1958 does not provide the equatable arrangement of the right with the activity operated with the need of the different method of the emphasize of the recent legislation requiring and increased production. Alright, where were we? The concern with the disposition of petroleum product to produce the Navy to perceive they are adequate competitive with the routine sale of the highest bid for the consistent with the legislative requirements, recommendations. Recommend the Secretary of the Navy, the Director of the Operation of the Navy, the Petroleum Reserve, the tab of the contract, proceed the conform with the policy, proceed with the set forth in the Army, for the procurement regulation for the recommended recently awarded contract, the operator of the Petroleum Reserve, the number 1 and 4. View modified and necessary with include the provision of the procurement regulation. And view the action of the Navy State that has to take with the development of the formal maintenance testing program of the Petroleum Reserve, the number 3. Have no recommendation for the activity in the reserve of the review of the naval action with the opposite same proposal of the new operator contractor reserve, the number 3, with no recommendation concerning the current contract recommended to have with the award of the new contract to comply with the newly established contracting procedures. Alright, Chapter 3, Navy Plans for Petroleum Reserves.